educational purposes, and it's important that any information that is being shared during this session should not be considered as an investment or trading advice. And additionally, I would just like to remind you that CFD trading carries a high level of risk. So it's actually crucial that you conduct your own research and do your own due diligence before you make any trades. All right. And today I'm very happy to have Binni here with us to share on the topic trading automations that you can easily incorporate in your trading system. And of course, in today's fast-paced and ever-evolving financial markets, right, we notice that many traders are constantly seeking ways to enhance their trading strategies and improve their overall trading performance. And of course, one of the more popular platforms to support this is actually MetaTrader 4, which IG offers. And the most effective way to actually achieve this is also through the use of automations, okay? Because not only they can help you to eliminate human emotions, these automated systems can also save time and effort and provide you with a more competitive edge by executing trades more efficiently. So today we have Binni, and just a very quick introduction of our guest speaker today. Binni has more than 15 years of experience in providing trading education to both institutional and retail clients. She also trains and trades in a huge range of asset classes, including equities, forex, commodities, and other derivatives. And in her area of trading, she has also developed many mathematical-based systems and specializes in projective ratio analysis and price action. Okay, so we are very privileged to have Binni Ong today as our guest speaker. And without further ado, I will pass the time over to Binni right now. All right, Binni, please.
Hello, hey Ethan. Hello, good evening all of you. Thanks a lot for joining the session. Let me just start off with sharing my screen. All right, that's good. Have you had your dinner yet? If you can see my screen, you can hear me, and whether you have dinner or haven't had your dinner yet. I mean, Singapore time is 7 p.m., right? Some of you might be having breakfast, right? Can you just type a 1 so that I know that you guys are in good hands? Type a 1 at the question box. That's great. Thanks a lot. And just to have a few, because this is the second session that I did. The first session was last week. Just give me a feeling of who had attended my earlier session, the one that's just last week. If you had attended, just type a 2. Or not many, or you're just still typing? Not many. Okay. Oh, okay, that's good. All right, so it does, give me a feeling of what I can say, because last week I covered quite a fair bit on automations. Talk about what you need to do to start with automations, incorporating processes into your trading strategy. So today I would just continue this, although it's an independent section. So don't worry if you didn't attend what I said last week, right? So I'm going to talk about trading automations that you can easily incorporate into your trading system. Okay, so just give me a few of what you are trading at this moment, whether you're doing Forex, whether you're doing indexes, commodity, etc. Just type there and just give me a few of what you're doing, what kind of instruments. Okay, while you're doing that, do spend a while to take a look at IG disclaimer. So this is IG disclaimer here. And the next page bears my own disclaimer that's saying whatever that I'm saying here would be not financial advice, not for you as a recommendation to buy or sell, just totally, entirely educational. Okay, I can see Forex indices. Anybody doing gold as well? Gold is my favorite instrument. In fact, that yesterday I was just shorted gold. And last this week I was doing long the dollar, so I short the Aussie and the Kiwi. Actually started shorting since last week, and yesterday it moves quite nicely and closed the position already. So yeah. Okay, now for those who do not know me, or for those who know me, my name is Binni. Now I'm no longer in the 30-something age range already. So I've grown older, although that some people thought that I'm still at 38. No, but Okay, that's not a very good way to start off. But if you had been to my training with SGX Academy, yes, I'm an SGX Academy trainer. I trade into quite a wide area of instruments, including stocks, futures, index futures, as well as forex. So in Singapore, I'm very much known as the forex person in this indices and indexes, as well as gold and oil. So these are my few favorite trading instruments. All right. I also developed my own trading system. I also help my clients. They are basically some banks, some financial institutions, some family offices, and trading team to develop and test their trading system. Okay. So what I want to cover today would be one, my trading strategy. I just hope to share with you what I'm doing right now. Although that's it really will take quite some time to fully talk about what I'm using, the actual method I'm using. So I try to answer as many questions as you have, but I don't think that I'll be able to cover all of them in detail. So I'll probably just give you like a bit of a glance. Okay. Apart from trading strategy, which is something that I want to emphasize on, I think that the trade types is very important because you find that. Why do I say that? Right, because you find that, for example, you learn from someone else, or you read books, or you look at YouTube, right, and somebody shared with you the trading method, and you follow like 100%, but yet you can't make money. Okay, then what is the reason? There are also all these nitty gritty that perhaps the person never say things like, "Oh yeah, I only take these type of a trade. Okay, I don't take all the trades, even if I see the signals." So out of like 10 signals that happen, all right, maybe you took all 10s, right, and then you don't get the results. Maybe the person who is teaching you or develop the system, maybe will be taking only 3 to 5, because then the other 5 or the other 7 doesn't need that trading type. So I just want to share with you the trading types. And also, if you are going to develop your own automations, then what type of automations that I think a trader should have. Okay, so these are my preferences. Okay. In terms of trading profile, I've also like to share with you what kind of trading profile I am, so that whatever that's being discussed will be aligned, because you know that in trading there are different profiles. Some people hold on to their positions. Some people are scalpers. Basically, they look at the lower time frame chart, like using 1 minute, 5 minute, or even 15 minutes to trade, right? I am not so. So in the morning, I start off my day really early. Today is a very early day for me. I start my day at 5:40 a.m. All right. And then after that, did my usual set of exercise. I was able to do like my full set because it wasn't raining last night in Singapore, and not raining in the morning. So that's lucky. And in the morning, that's where I look at the Singapore and Hong Kong markets. Okay. So I'll be doing stocks as well as index futures. Then when it comes into the afternoon, doesn't mean that I don't do the FX in the afternoon, because FX trades 24 hours, but because it gets a little bit more active, right, during the afternoon session for Singapore time. So about 2 p.m., that's where I start to look into the FX, the commodity, as well as the indexes. So indexes, I do trade quite a different market depending on, I don't have a preference, right, depending on which one works very well. Like for example, 2 weeks ago we were trading into the FTSE index, right, the FTSE 100. So that works really very well. Yesterday and the day before, it moved a lot. All right. So I'm a 4-hour trader, which means that every 4 hour, then I have a signal, which means my entry is using a 4-hour bar. And basically, by the time that is about nighttime, evening time, about 10 Singapore time, that's where I either let the machine take over, that means let the robot take over in terms of my execution, right? Or I just sleep. Okay. So a lot of my trades are partial automations. Partial automations means that I just have to decide whether to take the trade or not to take the trade, and the rest of it will be managed, right, by the automation. So I talk about the last section, how I use that to manage my trades. Now let's talk about my trading strategy, right? I just want to give you a bit of an overview about trading strategy, to let you know a little bit, right, about what I'm trading, how I'm trading. I think that this is important because a lot of people would just look at, okay, whether the method can make money, but you really have to delve and drill inside the reason why that when you are using, all right, on a seemingly profitable method, you are not getting the results. Okay, so this is where I want to come in to let you know what kind of things I'm trading. Okay, I'm doing multi instruments. I don't have a preference to say that I'm doing gold or I want to do indexes. Okay, the reason is because the market move differently. So sometimes the gold can move very well, but some certain times that gold can be in this consolidation, which is really very difficult to trade, right? And it's not profitable. So in a way, I'm going for the low hanging fruits. Okay, I repeat this, right? I'm shuffling between the instruments, including stocks. All right, and I am trading into the low hanging fruits. So how do you get the low hanging fruits? That's two ways. Okay, one way is to trade on strong levels. That means that you really focus very much only trading when that very strong levels are there. Okay, that means that all those minor sub levels, you don't do it. Okay, so this is one way, right? So later I will explain this, right? The other way is to trade during, all right, when a consolidation happens. Okay, so let me just get my pen to explain this, right? And these will help you to understand why you are not, sometimes, right, not doing well. Okay, so for example, there are two main types of trades mainly. That means that if you ask anybody who is trading and only any gurus out there, they would be either trading a trend following, broadly a trend following strategy, or a counter trend. Okay, so what is a counter trend, right? So imagine if price moved from $1 here and it moved up to $10, right? In a short time, you think that price moved up so fast already. You think that it is very high, right? Very far away from the average price, the mean price, right? Which is this green line here. So what you can do is that you can do a counter trend, all right? So that for price to trade that price resume back to the mean. Okay, so that's one way, all right? So it's a counter trend, right? The other way is that you strictly follow a trend, all right? So that means that whenever, if the trend is up, you only take the buy side of the trend, all right? So for me, all right, I don't differentiate in terms of the method I'm using. I do not differentiate between whether I'm taking the trend or whether I'm doing a counter trend, all right? As long as this part here has a strong level, this part here has a strong levels, this part here has a strong levels, and there's space, then I will be taking the trade, okay? So it's always between these instruments. So for example, yesterday I just closed off the Aussie dollar short and a Kiwi dollar short trade, right? These two trades, they are all countering the trend. That means that the trend was pretty much up, but it went into a consolidation, but I actually shorted here and then, wait for it to come back down. That was very good profit. But the thing is that I don't differentiate between whether I'm strictly doing counter or strictly doing the with the trend type of trades, okay? Now I'm doing a lot of swing trading. Not necessary that I need to close off the trade on the very same day. All right. A lot of people ask me that, do you close the trade on the very same day? Do you hold the trade over the weekend? And what happened during, like for example, important news announcement? All right. So to answer this, all right, I do not differentiate to say that I need to close off the very same day, although there are certain situations that I would try to trim off my very profitable position. For example, NFP. Right? Why is it that I don't like NFP? Right? That's because NFP happens on Singapore time on a Friday evening, night time. Okay, so it's around 8:30 or 9:30, depending on daylight saving. Now, I hate this because usually Friday I would be out. Okay, so I don't want something to trouble me when I'm out, like going to enjoy that weekend already. So usually I try not to trade into NFP. I try not to hold positions into NFP. Okay, so this is something that I've been like my style, okay, my habit, right, for a long time. So this is what I usually do, not because that the method cannot trade into NFP, but just that I don't like this to happen. Okay. Do I hold the trades over the weekend? Yes, I do. But that's only when I see that strong levels have been broken, or that's still momentum. Because if you don't trade, if you don't hold it for a period of time, unless your lot size is huge, otherwise, right, you don't really get a lot of like money out from a particular trade. You find that there's a lot of attritions. Okay, what do I mean by attritions, right? You find that sometimes when you lose a lot of money, but when you are not holding on your trade for a while, unless your position is huge, your lot size is huge, right? You find that you earn a little. Okay, so these are a lot of problems with traders, and I do multiple time frame. That means that I mainly use a 4-hour to enter. Okay, you find that having a 4-hour entry to enter, right, works very well, especially when you talk about breaking the word, all right, into different zones. I explain why a 4-hour entry is, to me, almost like a perfect time for entry, right? It's because that you look at our word, they're basically distributed or rather segmented into 3 parts here. The first part, which would be the first 4 hours, which is I call this the 8-hour zone, right, will be largely into the Asia, all right, plus the Japan side. Okay, meaning that when you look at the start of the market, then that would be, for example, Australia, New Zealand, followed by Asia, China, and then also Japan will start first, right? Then Asia, then you will close slowly. So that's during the first 8 hours. Then the next 8 hours would come in, all right, to do that Eurozone. Okay, and the middle 8, okay, and after that, the last 8 hours would be the US zone already. Okay, so when you are probably looking into the dynamic of the flow of the market, then if the first 8 hours doesn't have anything, all right, then you realize that a lot of time that flow will come in during the Eurozone. So that's why at 2 p.m. or maybe around 6 p.m., and that's where the movement starts to come in. Okay, so if you're doing forex, if you're doing a lot of in fact that it happens to all the instruments, you find that this zone, it's a very good zone to trade, because that's where a lot of action starts to happen. Okay, and that's where you realize that in this part of the world, a lot of people actually move to Thailand, a lot of people stays in Singapore, Malaysia, etc. to trade, right? Because we are right parked in a very nice trading zone. Okay, and of course, this part here, during the first part of the US trading zone, it gets active, right? And maybe the last 4 hours, really nothing much. And then we break that down into the Asia zone. This one here, the first 4 hours, also nothing much. And we don't really have a lot of activities during the first 4 hours for us and the last 4 hours for us. And that's really our sleeping time. Okay, so I do a multiple time frame, meaning that I will look at the entry, rather the setting, okay, as a reference, and that comes in from the day and as well as the week. Okay, so I do use this 2 time frame that the entry is into a 4-hour. Okay, so this just give you a little bit of a background first, huh? All right, and I believe that it answer a lot of questions from traders also. Because it's not only about the method, right? The method must consider the huge scope. Okay. Now, one thing that I realized that a lot of people also doesn't answer properly is that they asked, when do you open a trade? Or no, they focus too much on that trading strategy. They do not differentiate this thing here, which is called sufficient space. Okay. So let's say, for example, I have under the same strategy, the same method, I have a signal A, okay, and tomorrow I have the same setting, same method, right? I have a signal B, and A and B, they're all the same, coming from the same rule, right? But why is it that sometimes you take A is profitable, but when you take B, right, which they are the same, all right, it just happened on different day, and B is not profitable. Okay, why is that so? Right, the key thing lies in whether there's enough space. Okay, so that's why I say that I don't differentiate between whether I'm doing a counter trend or whether it is a trend following. All right, as long as that from the point that I enter to the point that I'm about to take profit, All right, then there must be enough space. Okay, what do I mean by enough space? Let's say we talk about the trade in Aussie dollar. Okay, Aussie dollar had consolidated for a long time already, a while, and before it starts to move yesterday. All right, it's one of the most constipated pair that you probably seen for the past week or maybe last week. Okay, because we were, as a community and my team, we were formulating a trade, right, for Kiwi and Aussie. And the students get very impatient with that pairs because they say, how come it wasn't moving, etc. But when it starts to move, you find that you can't chase because it's moved so fast. And when it starts chasing, you will get into a losing trade. Okay. But what is the key of that Aussie dollar trade yesterday? The key was that there's sufficient space. Okay. There's enough space between a resistance, for example, if you're going short, right, and the next support. Okay. So when this happens, that's spaced so that you can easily make that 200 or 300 pips movement. So this is what I mean by a low hanging fruit. So the key thing is that when you are taking a trade, don't focus on only the strategy. All right. Focus on whether that's enough space. Okay. And that you can get easy money. Okay. I will elaborate that later on. Okay. So my trade, right, mostly on price action. I rely very little on indicators, all right, because you know that they are really not I wouldn't say they're not accurate, right? But they if you use it properly, you know you can use it to help you to make decision. But if you don't use it properly, you don't know how to use it, then it's gonna cause a lot of problems. So I use a failed priced movement, which I call that as a wash and rinse. I'll explain that later. And I assume that the current structure stays true. Now, what is this statement here, right? Now, a lot of trade, right, relies on breakout. Okay. Now I have to make this statement, right? A lot of books are written like 30, 40 years ago, and we are still reading those books. But don't forget, right? What happened in terms of the trading conditions, okay? 30 to 40 years ago, we don't have it here anymore. Okay, I just give you one simple example. 30 to 40 years ago, forget about computer, forget about handphone, forget about doing everything on your mobile phone. All right, because we don't see this technology. Forget about AI writing a composition for us. All right, because we don't have that 30 to 40 years ago. But yet we are still reading that textbook 30 to 40 years ago. Why is that so? Okay, because all these techniques are not updated, because there is no need to update this technique. Why? Because the market is not there to let you make money. Okay, you have to understand this. Okay, all right, because imagine that let's say the banks, okay, they have an edge. All right, why would they want to reveal this edge to you? For example, we talk about AI. We talk about AI taking over human job, but how come we don't see a lot of development in the trading field? All right, versus, for example, writing composition, writing articles. All right, so there's a difference here, right? So what I'll do is I'll assume that the current structure stay true. Okay, meaning that if this is a support, all right, and it comes out, I will assume that it will be supported every time. Okay, that means that I'll be catching a support here for it to rebound. Right, I don't trade that breakout unless that a breakout is true. Okay, so this you will realize you go back on your losing trade. And if you are trading on the breakout, you go back on the losing trade, right? And you see how many times that you will write on the breakout. So these would helps you understand. Okay. Lastly, I do not have all correct trade. Okay, meaning that if you look at this was one of the trade that I traded, right? You realize I don't have all correct trade. In fact, I have losing trades. Out of the 4 trades that I did, all right, one of them was losing. And I probably only out of 4 trades, probably just rely on one JPN 2 to 5 to get me the money. The rest all cancel off one another. Okay. So what happened is that even for pro traders, forget about getting that accuracy like near to 70 or 80%. We don't have that. I want to tell you the truth. Okay. Sometimes my accuracy is even worse than my students. I probably have like 60%, 50, 60%. But you know, the good thing about me is that I'm able to exit my position very fast if it's a losing trade. But I can hold on to the winning trades and I can make a lot of money from that. So what a trader should do is to aim for consistency, to maximize your profit. So this is very important. Okay. Now, any question here before I moved on? So I just give you a little bit of an idea here. I just want to tell you like a bit of a reality, a lot of things that you might not have thought of. Okay, something that makes sense, but it's just it's just so obvious. But maybe that by knowing this, you can just make a little bit of a changes. Yeah. Okay, so I sum up what I've just said. Go for trades that have space. Okay, go for low-hanging fruits. Don't go and say that I only do gold and I want to focus on gold. There are simply days or months or week, right? That just not doing not a nice movement. Okay, all right. Any question here that I can answer? You can share with me share with me your experience, because probably in my 25 years of trading career, I would have encountered that. Plus a lot of emotions, a lot of psychological issue. There was a period of time that I wasn't able to click the mouse. Do you know why? That means that I wasn't able to click the mouse, click the button here, because there was a period of time that I was scalping. Okay, scalping the market. Scalping means that you really fix there and look at it, and then you are like click, scalping, right? Scalping, right? And I realized that I had a huge psychology issue. Okay, because it was so stressed until the point that I didn't realize that my fingers, right, frozen already. It was glued as in not literally glued, right, but it's just frozen and too I can't even bend it, right, and it was just glued to that mouse. Okay, all right. Okay, so I will talk about that later on, or what indicators, price actions convince you to exit the trade. I usually do via price level. But so, are you fundamental agnostic? Not really. Although that, yes, I do follow the fundamental, right? So for example, well, because fundamental doesn't really help too much in the trading. Why? It's because, of course, like for example, we talk about the recent yen movement, right? We know that BOJ probably won't be doing anything and will still maintain a loose policy. Okay, so that's at the back of my mind, right? But in terms of entry and exit, so as I said, right, as when there are space, then I will do it. But of course, I prefer to short JPY. That means to long the yen pairs, for example. Okay, so this is where the fundamentals come in. But as I said, when there's space, I'll do it. Okay, so let me just talk about the method which is called wash and rinse. I'm not sure whether you heard of this, but it'll be good to just Google a little bit, because it's very, very, I would say, profitable. For me, I'm not sure about you guys, okay, but for me and my community, so far trading into the wash and rinse, they are very, very good for us. But again, that past performance is not indicative of future results. So I just want to make a general statement here, okay? Okay, so let me just cover this wash and rinse, and I answer your question later on, right? I just want to ask one question to you guys. When you see this candle here, there's a white color candle here, right? Okay, white color candle, right? Are you more likely to go long, or are you more likely to go short? That's just an indication. If you are more likely to go long, just type long, or just type buy. Or if you're more likely to go short, just type short or sell. You cannot do nothing. Okay, you cannot wait. You must make a choice, because it helps a lot in understanding your mentality. Anyway, the money not at stake, right? Just making a guess only. Okay. How about the rest of you? Okay, I see more long than short. I see more buy than sell. Okay. Okay. Now, based on momentum, you're more likely to go long. okay? Because then the trend is up, all right? The momentum, it's moving, right? Is moving up, okay? And this one here just happens to have a huge surge in price, okay? Well, it's not fair to ask you to make a guess, all right, because you don't have a lot of inputs. Huh? I only put in relevant information here. But what we know that from this information is that the trend is up, okay? But what I'm trying to do here is I'm asking, what if you are wrong? That means that what if you gone wrong, all right, and what if you are long? You are wrong. What if you gone long? Okay, and what if you are wrong? Then my question to you is that do you have a counter trend, counter strategy, or do you have an action plan? All right, to let you recover your losses or to counter your wrongs. Okay, so that's what I'm asking. Okay, because it is very important that when we have a strategy, we have a method, that we also think about what if I'm wrong. Okay, all right, so I just wanted to bring to your attention on this one here. And what happened, okay, was that, as I said, it wasn't fair, right? So I just blind off a little bit, right? I just want to explain this one and my method to you, okay? So when I show you just now that long bar, it was this long bar here. So these long bar, okay? Now, I show you merely the momentum. Now, which is true because a lot of people might not be looking back. Okay, you might not look back and they only focus on this region here to say that, okay, there was a bullish bar. Okay, all right. So if you look back and you would realize that the very long bar here, that means a very long bullish bar, happens to be near to a key historical resistance. By the way, this one is gold. Happens to be near to a key resistance level. That means this is a resistance levels because these was a high, a very significant high, right? And we saw that after these high appear and price actually moves down. Okay, so when price moves up, it went near to that high point here. And I just want to bring your attention because this is actually very recent. Do you find this very long tail here? Okay, so for those people who are scalping on a lower time frame, all right, yes, okay, they might be able to exit in profit, okay, because then they are on the lower time frame. They probably benefited even for this very long tail here. But think about people who jump in at this long bar here. That means that you jump in at this long bar thinking that it can continue to go higher. You'll be faced with what I call as a washed, all right, and a rinse, okay? Meaning that price was being pushed up, all right, but that's a lot of actually rejection and ultimately price move back down. Okay, so two things I want to highlight is I said just now, I trade by assuming that the current structure will stay true. Okay, what is the current structure? I don't assume that there's a breakout. I assume that the resistance will always stay at the resistance. That means that I assume that I should be looking for a short because the resistance previously, they were still valid. So that's the first assumption. Now, second assumption is that if I am managed to get a short around here, let's say around this region here, right? Whatever it is, then I can see my space. Okay, so for example, first level here would be this level. I just have to ask myself one question, right? Am I able to get some profit from here? Is the profit okay in terms of the risk taken? Okay, that's number one question. Number two, right? If I see some levels here and some levels here, then I ask, right, is there still room for me to take the trade? That means, is there still space for me to take the trade? Okay, so these are the things I ask myself, all right, every time I open a trade. Okay, so let's talk specifically on what is this wash and rinse about. Just give me a while to get my pointer. Okay, here we go. Now, what is wash and rinse about? Later we're going to come back to that, the other slides. What is wash and rinse about? Wash and rinse about it's about doing a fake move. Okay, now you realize a lot of time, right? I'm not sure whether this happened to you, but I think it does. Is that when price when you decided to take a shot, okay, that means that you think that it is a very good level to sell already, and you decided to sell, okay, and when you short it, but instead of price moving lower, okay, instead of price moving lower, what will happen is that price will keep going higher and higher, okay, until you start to suspect yourself. You start to suspect that whether the trade is good, you start to suspect your signal is good, you start to suspect so many things, and you lose confidence until one fine day you decided to cut away your position, or you just being stop out. Okay, what is cut away the position? Because you shorted, ma. Okay, when it moves down, all right, if you ever move down, you'll make money. But if it move against you by going up, then you have the cut loss. Okay, so have you ever experienced before that the moment you cut your losses, that means that the moment you get rid of your position, the moment you take the loss, then it will just magically move down in the original direction. That means that you will just magically move down as if nothing happened, and then your stop loss, your stop out was just meaningless, and you just lose money, but you just watch that position becomes profitable. Okay, have you ever tried this before, or have these unpleasant experience ever happened to you? Let me know. Okay, so this is what I mean by wash and rinse. Okay, because you have to understand what I'm trying to say here. While you can see the let me just get my pen, right? Okay, while you can see you can see this level here. That means you can see this level here, right? Whatever automations that's out there, whatever professionals that are out there, right? They can see this level, definitely. Okay. And not only that, they can see these levels, and they probably have also understanding of order books, etc. Right? They can purposely or for whatever reason, all right, push price up until that all the stops on top, right? Because a lot of people will probably see this as a resistance, and we just put some stops on top here, right? And all the stops on top get flashed out, okay? And then after that, right, it just moves to in its original direction. That means it moves down, right, after they flush all the stops. Okay, so this would be a situation where no matter how far, right, you put your stop, you still get stop out. And after you get stop out, you just see this huge down, and you just so disgusted with everything. Okay, so this is very, very common for only one reason. If you can see this resistance, I'm very sure the machines, the automations, the professionals can also see this resistance as well, can see these levels, and they can do something about it. Okay, so I want to deliver one message here, as that the market is no longer that simple already. Okay, there are a lot of automations out there that you cannot imagine. All right, why we are not exposed? Because it's just no point to let you know, okay, or let we know, right? Because we are the small little retailers out there, and if you know about it, it doesn't benefit them. Okay, but all this wash and rinse, it does happen. Okay, so maybe you ask me, then how do you prevent yourself from being stop out? Just have to let you know, no matter what level of SL, of stop loss that you're gonna put, all right, they have a way to flush it. Okay, I assure you this is true. All right, no matter what stop loss you put and how you shift a stop loss, unless that you don't put stop loss, which is very dangerous. All right, they have a way to flush a stop loss, and hence, all right, after trading the market for so long, the only way to do that is to trade after the flush had happened. That means that you wait for the flush to happen and you trade it, because you don't want to be flushed, so you wait for the flush to happen. Okay, same thing, right? If you know that this place has a traffic jam, okay, rather than you go and get stuck in the traffic jam, all right, we wait for the jam to stop first, okay, then we go in. All right. So this is my simple solution to being stop out just unnecessarily. That is to trade that wash and rinse. Okay. So how does the wash and rinse work? It goes like this. Basically, if you are looking to sell, because there are two patterns here, one is the buy and the sell, right? I'll just explain the sell pattern here. Okay. So if you are looking to sell, just remember you aim to sell high. Okay. So for those who had been my earlier section, all right, I already mentioned this, how it works. All right. So you want to aim to sell high. To aim to sell high, you have to wait for price to go higher. That means that price had to go higher. And how do you know that price is going higher? Very simple. You wait for price to close above the previous high. So if price can close above the previous high, then this means that price is how to say, it's higher, right? So if price can close above the previous high, price goes higher. So just give you an example here. So if this is $5, if this is $10, so price move from 5 to 10, which is bullish, right? And how do you know that the next bar is higher? That means the next bar has to trade higher. Like for example, it has to close at 12. 12 is bigger, is larger than 10. Therefore, 12 closed. So therefore, this second bar, right, closed higher than the first bar, right? Because of numbers here, 12 is larger than 10, right? So we know that 12 is that number that determine that the second bar is bullish. Okay. So a lot of people might buy at 11, might buy at 12. Why? Okay, because they see that, okay, if price breaks above 10, if I buy at 11, that's confirmed the breakout, confirmed that it's stronger. And I hope that price can go up, right, higher to maybe 13 to 14 to 15. So that's the hope, right? Now, let me just ask you one question. What happens if price doesn't stay above 10? Okay, doesn't stay above 11 or 12. Instead, it moves down to 8. What do you think will happen to people who bought like 11 or 12? Okay, are they happy or are they sad? For people who bought at 11 or 12, if they see that price is right now at 8, are they happy or are they sad? What do you think? Let me know the answer. I will answer the rest of your questions later on, okay? I've seen your questions. I know them. I'll answer one by one, but let me just go through just what I'm going to talk about, okay? So obviously they are sad because then if you buy 11 and 12, and then you hope that it can go higher to 13, 14, 15, but right now it's at 8, right? Okay. Now, so what happened is that I call this section of people who bought on the breakout of 10. Okay, once it goes back down to below this $10, which I call this a wash line. Okay, that means that this line is that divider. Okay, that divides the bulls and the bears. So whoever who's at 11 or 12, they are still the bulls. But when it penetrated and it goes below 10 and it goes like maybe like to 9 or 8, right? The people will be definitely very, very disappointed. And what will happen to those people who bought here? They will be in a rush to sell their position, okay? Because they bought at a high, they want to sell out their position because they want to cut their losses, okay? And of course that because of this disappointment, because of this sadness or regret, right? So when price again reins back below that wash line, all right, it becomes a trade signal for us, okay? And why does wash and rinse happen so often, right? Because the market has different layers of support and resistance, historical levels, okay? Because people are using different methods. People are using Fibonacci, people are using pivots, people are using any form of other things, a Bollinger Band. So because of all this methodology, it created different layers of levels, okay? So sometimes that levels is penetrated a little bit, all right, and that caused some people to do an action, but then that's not a real move, okay? Because then theoretically or on that value system, it's just not worth it, right? So when price reins back below that wash line, this becomes a short opportunity for us, okay? And by doing so, we are able to avoid all the nonsense that can happen here. Okay, so this is as simple as it is what wash and rinse is all about. But of course, that wash and rinse is a lot more complicated because I explained last session that wash and rinse doesn't only have two candles, two bars pattern. It has actually like more than two bars pattern. Okay, so you can refer to the earlier section to understand a little bit more, or you can just come to my website because I do have a lesson on wash and rinse for you to further know about it. As I explained, I can't like explain fully. Okay, so let me just talk about this one here, which was a recent gold short. Okay, that means that this is very, very recent. It happens around late in December and early Jan this year. All right, so we know that this was a resistance. Okay, so this red line here has been consistent as a resistance. Now, but you also, for people who traded that, we also know that's a key resistance here for gold. All right, but you find that this bar here, okay, priced still want to generate some positivity. That means that you still want to generate some bullishness. It still is a white color bullish candle. Okay, you see that? But it's being pushed up and right into a resistance level, right head into the resistance level. But the fact that it is a white color candle means what? Means that people actually bought in, isn't it? People bought into this candle here and bought into gold here, right? Okay, so you see this green line here, and you see this red color thick here. So this green line was being drawn to show the wash lines. Okay, that means that anything that's above the wash line is still considered as positive, still bullish. All right, but what if price closed back below it? That means the price actually traded below it. When this happened, right, we call this a wash and rinse, right? So when you see this red color thick, it says that price had confirmed that wash and rinse. Okay, so this becomes our trade. All right. Okay, so I just want to know whether there's any question here. Okay, so that means that our short will come in when price rinse back down, all right, and around here. Okay, so in terms of the space, right, so we probably have like a bit of a like a wrist here in terms of our wrist, and then somewhere around here that becomes our reward, or you can just take a look at this space here, right, which is very novel, and then these will becomes our reward. So that's our reward, and then this one will become our risk. So it's a like I said, right, the reward to risk is actually very high, and wash and rinse, it's very logical and it does happen quite often. Okay, as I said, that the entry is on a 4-hour, but it has to be used on a higher time frame. Okay, last session I explained why that I use it on a higher time frame, which is to look at wash and rinse on the day and the week as well, and then to do the execution on the 4-hour. Okay. All right, so let me just continue. Okay, so that's wash and rinse. Okay, so to sum up, right, wash is a move in the opposite direction first, and then rinse is a move in a subsequent direction of your original direction. All right, and when this wash and rinse happen, right, the result is that there's unnecessary loss. Okay, now the candlesticks that I'm showing here, right, they are not the 4-hour time frame. They are all the day and the week time frame, because wash and rinse works so much better in the week and a day because of the amount of money that's involved there. Okay, I explained that in the last session already. You can refer that to the previous one. But the candles here, wash and rinse, are all identified in the higher time frame. Okay, because I trade the multiple time frame. Okay. Yeah, I in is a double top, yes, but I'm actually shorting. I actually explained it already. Okay, now so but I want to say that when wash and rinse, all right, there are still preferred trade types, meaning that they are wash and rinse that counter trend. They are wash and rinse that not on very strong levels. These are things I don't like. Okay, so what I like is that I like to apply wash and rinse at a certain level. So these would probably answer a lot of your questions here. So this is the gold trade. Anybody shorted gold during last August and September? Let me just go through how it works. Huh? So anything that you see as a red color, oops, wait, here we go. Anything that you see on the red color, just focus on the color will do, okay? Whether it's arrows or thick, it doesn't really matter, okay? So anything that you see as a red color is a sell for us, is a wash and rinse that shows sell. Anything that's in green, it's a buy for us, okay? It is buy for us. And then this one is actually a sell for us, okay? Okay, here we go, right? So at the expanded version, that means that this is a trade that I like. And why is that so? Because when we had the signal here to sell, or when you had the signal here to sell, right? Now this signal is a trade, was a trade that's with the trend. What is with the trend? I mean, they say trend is your friend, right? But yes, trend is the friend. But if you look at the whole thing about wash and rinse, you realize that wash and rinse we are able to capture at the tip of a movement. Okay, that means that a lot of time wash and rinse will happen where it's at the tip, the extreme low point. All right, you see extreme high point, extreme low point. It's just capture that turning point. Okay, so it's wonderful. But if you can take the wash and rinse, that's with the trend. For example, this one was a low, this one was a high. This is a lower low, right? As compared to the previous low, and this is the lower high, right? When you look at this is a lower low as well, okay, as compared to the previous low. And when you look at this set, right? So this is the lower high. Okay, so a short here was actually with the trend trade, and that's like really fantastic, you know, fast, quick one. Okay, so for example, this one correspond to these here. So this was that washed, the price had a close above the previous high, and then when it goes back down, you see that's your red color tick, right? You can see this small little red color tick, right? That's our rinse. And so we put in the trade in a 4-hour time frame, and that's where we go, boom, huge moves. Okay, all right, so it's not about how long we keep our profitable trade. We go levels by levels. That means that when we traded this, we note this level here. So this was, and let me just clean this, okay? It's not time. That's why I say that I do hold my trades. Huh? So this was a level here. So these were key levels. So we note these key levels. If it doesn't rebound from here, we continue to write the trade and we continue to power in a good trade. Okay, so that's why you see that my accuracy, as I said, right, wasn't even as high as my student, but I was profitable. Why I was profitable? Because on a good trade, I dare to hold, and a good trade, I dare to add in. Okay, so it makes a huge difference. All right, so you can have wash and rinse everywhere, but if you can find basically those which are with the trend, and the unique characteristic, right, of wash and rinse is that it gets that tipping point. So you feel very comfortable because you really get that tipping point in a trade, right? That's with the trend, where you get very comfortable trade. Okay, so the first type, right, is something which I think that people always say, you trade with the trend. Okay, all right, and we go level by level. Okay, so that's answer the first question. What I'm trying to say here is I'm trying to bring to awareness, right? It is not strategy. Last week I mentioned process. This week I mentioned the trade setup. That means that as a pro, there are certain preferences that we do, all right? And a lot of the newbies doesn't know, okay? But we do filter our trades. That means that we do like have a preference, okay? As I said, choose the low hanging fruits, all right? Okay, the second type of trades which work very well is this type that's at a strong level. Okay, so we finished shorting already. Okay, but when it comes inside here, do you remember the Gaza war? Okay, so this was the gap, right? That was as a result of the Gaza war. But before the war happened, I was already telling my community that we are ready to go long. All right, go. Because this was a huge momentum, and gold actually stopped here for a while, right? And the reason of it stopping here was because of this level here, which was a very, very obvious strong levels. Okay. We don't want to jump in immediately. Why we don't want to jump in immediately? Because you see this long tail here, that's somewhere around long tail here. So if you jump in and then you put like maybe you enter near this level, right? They would find ways to stop you out. They will find ways to go and flash a stop and stop you out, and it's really no point. Okay. So the only way to solve it is that you can see it coming. All right, you trade that after the flash had happened. You don't just trade by going in and then you let it be flashed. Okay, so that's such a waste. And imagine that you lose already, you don't have really mood to enter. Okay, which happens to many people, isn't it? You lose money already. I don't know, I just give up. I don't want to enter. Just wait for the next day. And when you wait up for the next day, the move happened and you totally miss out on a huge move. Okay, and this totally removes that profitability from you. It's no point, right? So we wait for that flash to happen. We wait for the reins to happen. Okay, so I always like to assume that the levels, the structure is true. So if it's the support, I want to assume that it is supported, and I wait for a bullish wash and rinse here. So in fact, that you see this green color here, right, was for us a bullish move. Okay, so it was a green color thick, right? It was a bullish move, and we entered somewhere around here, and then we were able to catch that low point, and it was like just nice trade for us, all flying. Okay, all right. And that was really nice when we traded gold. Okay, and you find that wash and rinse, they do come in very strongly at strong levels here. For example, at this place here, right? What color do you see? Red or green? What color do you see? Red or green? Okay, red, because I like color coding, right? If it's red, what does it mean? Is it a bull or a bear? You see, all these are all very simple way of like conditioning your mind, right? Okay, and then when it's red, then you start to wonder, okay, how come it's red? You look back a little bit, or you say, oh yeah, there's a whole chunk of a resistance here. So there's a resistance. I assume that the structure stays true, right? I assume that the resistance is there. I just wait for that wash and rinse to happen. Okay, and even at the resistance, right, you do see that price was being forced up, pushed up, and then rinse back down, and that's where you get that profit. Okay, and then after a while you start to say, hey, look, I have a green color here. So this was green. It's a bit small, right? But you look back, you say, oh yeah, the green was here because of what? Oh yeah, because of a previous resistance that turned into a support. Okay, so we have working on levels. All right, levels just work perfectly. So you are not waiting for any confirmation, like going above the neckline in double bottom. That is, to me, a slow type of a trade. It's to me a bit outdated already. Okay, as I said, right, patterns, it works. That's being written 30, 40, 50 years ago. Okay. I'm not saying that they're bad. I'm saying that they work. All right, but it's just outdated. Yeah. Okay. The last one, which is the last setup that I like, is what we call a retest. Okay, people might say that is a double top. All right, yes, it's true, but we regard that as a retest. That means it's more like a like a double top, like that, a bounce. So we have first level and then we bounce off the second levels, or we have this level here and then we bounce off the second levels. Okay, so this is a retest trade that I like. Okay, but just to highlight, even if it retest, you do see the wash and rinse. Okay, so same thing. Let me just go by color coding, right? So this was a very obvious sell for us because this was red color. All right, and then this was a support level. Okay, previously it happened, right? This was a support level. This was support level. They retested. So we do have this green color entry here. Let me just clean to show you the green color. See the green color here? All right. As I said, as long as when we have space, we can And that's where we moved on to trade with the trend trade. That means we take that downward trend. So we shorted. All these are all my live trades. In fact, that I did this short, right, was when I was on the plane. So I was playing back from Shanghai. So I just key in the trade when I was in the airport, right? You know that Shanghai airport is pretty boring, so there's nothing much to do. So just take out and trade. Yeah. And when it hit the bottom, it cannot go down already. Forget about all these pin bar or whatever. They work sometimes, they don't work sometimes. For example, if you just rely on this pin bar, you have the next day, right, of another one more down bar. But if you focus and just look at the wash and rinse here, this green color here, right, this was the green. So this was that green bounce off this level here. So it means that a lot of people probably saw these support levels, right? They try to buy first. But then, on this same support, but still there are some additional flushing. Okay, so you don't do it during that flushing. You do it after that flushed, and you see this color here, and they give us a very good trade here. So that's wash and rinse. All right. So 3 types of a setup that I always prefer, and it means that what? It means that for us, okay, I mean, wash and rinse is something that I design, okay. You probably can't get it elsewhere, right, in terms of the software or in terms of how it's being traded. So there are preferences for us when we trade that. All right. So it doesn't mean that when all the signals happen and then we take all of them, okay, because it's a bit discretionary. So in terms of but if you want to take all of them, all right, then the accuracy is in the range of 60 to 70%. But if you can just filter a little bit, you realize that not only we have the accuracy, you have that movement as well. Okay, so that's the key thing about wash and rinse. And lastly, anybody traded the Nikkei 225 recently? Maybe like last 2 weeks, Nikkei 225. This was a index that I kept talking about to the institutions during October-November period. So because one of my job, right, is that is to train the institutions and to talk about the insights, right, of what we are seeing in terms of what to look at, etc. So one of the trades, right, that I was talking so much last year during November period before I took my holiday in December was Nikkei 225. So I was talking that Nikkei 225 is just going to break out already, right? So in fact that you can see the wash and rinse, the green color here, all right? Green color, that we had a green color and we had a green color before it broke, okay? So the thing about wash and rinse is that we always trade after price had pulled back. Okay, so that's the key thing. That means we don't trade on this breakout because breakout is really very dangerous. What we always do is that we trade on that breakout here. Okay, all right. So these are the thing that was being done. Okay. All right, now, so with this, what I'm going to do, right, is that these are the trades. Yes, it's covered on automations, but if you read the description, we also cover how these are being programmed, okay? Okay, so let me just highlight on this one here. Okay. All right, now, lastly, I just wanted to talk about the automations that anybody should have if you are trading, okay? So this is automations that I built for myself. Okay, so let me just quickly run through how it works. Like, so the first automations is on auto opening. So if you can have a method, you can automatically open the trade. So these automations work on the wash and rinse entry. That means that this one is like a buy signal for us, okay, and automatically open. Second one is to automatically shift the stop loss, and it keep on adding to the winning basket. All right, and lastly, you realize that all these red color dot dash, right? So these are the stop loss that's shifted. And lastly, it will add in position, okay, auto add in position, and to also look at certain key levels. If that certain key levels doesn't maintain, it will automatically exit the position. Okay. So a few things that I want to highlight in terms of the automations that you're going to have. Okay. Number one is that when you open a trade, you need to be able to evaluate your risk levels. Okay. So let me just run through this automation first to show you. Okay, so these will be the few things. So it has this auto entry. So you need to go and calculate your entry. Second, the shifting the stop loss. All right. Third, which would be adding the position. And lastly, which will be exit. Okay. So the first thing, which I think that a lot of people should have, and it's very easy to build it in, all right, is the calculation of your lot sizing. Okay. Now, how do you usually determine your lot size? Do you just put in the fixed lot size, or do you use a calculator and press and then decide how much you need to enter? How do you usually put in your trade in terms of the lot size? Any thoughts here? Okay, because having the amount to risk, that means that deciding on your lot sizing, this is the first step, okay, to automations. That means that your automations can be on any entry, such as a cross in terms of moving average, all right? Or it can be based on candlestick pattern. But to make sure that you get it the first time, right? That means that to make sure that the system is basic to fulfill that basic needs, okay? The amount to risk in any automations must be there, right? So you can put in each time a fixed lot size, or it can be like what I'm doing here to decide on the lot sizing via the percentage per trade, right, that you would want to risk. Okay, so things like I only want to risk 1% per trade of my account balance. Okay, and it is good to work on account balance, because the balance would be a better, because the balance would be about. So this is one way of calculating your lot size, which is the amount to risk, right? Okay. And second is that you can also be keying in terms of monetary value of how much you want to risk. Okay. So for example, I have three options here to decide on the lot size. One would be the fixed lot size. The other one would be the risk percent of account balance. And last would be the risk amount in account currency. Now, account currency is important to determine the account currency, because your funded currency could be, let's say, in Sing dollar, but your profit and loss, because depending on what you trade, right, could be in dollar. Okay, so it is always important to bring back your amount of risk, right, back to your account currency, which is your funded currency. Okay, a lot of people, when they do automations, they didn't consider this and they didn't define that properly, and that caused a lot of problem. Okay, so this will be the first thing that I think that all traders should put in. That means in terms of your sizing, right, to consider these three inputs there. Okay. Now, next is the component called overall risk. All right. Now, I'm not sure whether you realize this, is that what do you do if on the manual trading, right, if your overall risk exceeded what you intended to lose? Okay, because let's say, for example, we can calculate every time 1% risk each time, right? Or we can say every time we have like $100 or $1,000, depending on how much we have, right? But unknowingly, we might just open 10 trades or 20 trades. And these would blow that total risk amount. Like, for example, let's say each trade risked 1%. If you happen to open 20 trades, then that would risk 20% of your account. Okay, we are talking about risk when you first start the trade, assuming all trades are not profitable at that point of time. Okay, So apart from individual risks, okay, we should be looking at a component that take a look at your overall risks. Okay, now this is also a little bit tough to do because for automations, especially in MetaTrader 4 or 5, right, we are not able to consider trades in terms of risk, right, that is out of your that is not open using the automations. That means your EA, in other words. That means they can't consider the EA, cannot consider trades which are not open via the EA, okay, or open via other EA. So it is important to, when you apply this overall risk control, all right, it's important to have different platforms so that you can run one platform on manual trade, one platform on this particular EA, and then another platform on another EA. So you have multiple MetaTrader, right, to run all this in order to control your overall risk. Okay, so in all my EA, there will always be this overall risk control component. Okay, so you ask a few questions, right? So what if the risk, what kind of risk percent do you not want to exceed? So for example, this input here called stop trade risk percent is 10%. That means that when the risk, that means the amount of potential losses is exceeding 10% of your account balance, then something will happen. Okay, we can do a stop trade. All right, so the stop trade, what kind of stop trade? For example, you can say that I want to stop new trade, or I want to stop all trades. I want to stop new trades, because in my EA we also have things such as adding of new trades. So there are new trades which are totally new position. Okay, there are new trades which are added in using our profit. So we want to know that if you hit that 10% risk, then what kind of trades, right, do you want to stop? Okay, so this one is what we call a overall account risk to prevent that drawdown. That means that you want the X% of drawdown that trigger the stop trade mode. All right, and then you want to decide what kind of trades are being stopped. Okay, so that would be the second thing, which I think that all people should build it in. And the third thing, right, is what I call a stop trade. Under what situation do you stop trade? So there are two things. One is based on the trade itself. Okay, so you can say that I do not want to open a trade, or I want to stop opening a trade when it exceeds certain stop loss measures. Okay, like for example, stop loss, right, is something where it depends on methodology. Not all the methodology will have the same way of defining stop loss. Some people might define stop loss using an indicator. Some people might have a fixed range they want or fixed value they want. Okay, but basically you need to consider components of when you want to stop a trade. Okay, such as, for example, via your stop loss. If the stop loss exceed a certain percentage, you want to stop the trade, or exceed a certain ratio, you want to stop the trade. Okay, or via time. Okay, so for example, you realize you asked me a question on this, right? Do I trade into key news? So you can say that you can build in, for example, key news, high impact news, or certain news that you don't want to trade. So you stop opening a trade X hours or on that key news itself. Okay, so this is one way. The other way is for my method. All right, it doesn't it doesn't work very well. All right, during the first 1 hour of the starting of the day and 1 hour before close. Okay, so automatically the system is built, right, such that it doesn't open trade, all right, during X time. Okay, and also this one here, it also doesn't open trade on Friday X period of time. Okay, why is that so? Because when you look at us, right, especially for wash and rinse, we are able to get trades early in the week, and usually by the time that is Friday, we are able to close that and really knock off the trades, and then close for the week already. So one way that in terms of back testing, all right, that really improve the profitability of the system as to stop the trade on X hour on Friday. That means X hour on Friday, we totally stop trading. It will help us avoid a lot of key news, especially NFP that's very rocky, that generally we skip out a lot of bad trades. That means that via this component here, right, via this particular rule here, which is hot trade on Friday, right, we skip out a lot of bad trades that really decreases our profitability. Okay, so you need to have this component here. Okay, either define based on your stop loss. That means it's maximum stop loss already. You don't want to open the trade because there's really no point to actually open the trade where the stop loss is so huge, and also based on time. Okay. All right. Now these are the three things that I encourage to put in. Unfortunately, you realize that it is not based on method, because in terms of method, right? A lot of people have different things. You are probably waiting for like, okay, for automations, I want to put in a moving average. For automations, I want to put in like a candlestick pattern, etc. No. In terms of methodology, I assume that you already have a profitable method. Okay. But these are the three things which I consider very important. All right. If you want to sustain, okay, in terms of your profitability. Okay, all right. I do not think that today is a rehash of last Thursday. Okay, last Thursday, as I said, right, there are some people who doesn't attend the last Thursday's session. So I want to assume that they're independent. But this session here, I covered more of the setting. That means what kind of setting to apply on the wash and rinse. Okay, and basically to answer the questions which I thought that last week you had for me. All right. So let me just answer some of the question. Does wash and rinse usually happen at the top or bottom of the chart? I think I answered this one already. You realize that wash and rinse, right, most of the time, all right, it will happen at the extreme high or extreme low. Okay, but it doesn't mean that it's at the top or it's at the bottom, but it can allows for a trend continuation. The worst type of wash and rinse, all right, is to take trade, right, which are countering a trend. Like for example, this one, it doesn't work well, okay, because the main trend had already moved from up, all right, to become a down. So that's really where you take this long side, you are countering this downward trend. Okay, so it doesn't work well on this one, especially on a countering trend. All right, so I basically shared with you three types, right, where the wash and rinse work totally very well. Okay, strong levels with the trend and a retest. Okay, so these are what we usually trade. Okay. Okay. Now I've come to the end already. If you do have any other questions, you can just ask me. Let me just remove here. You can just ask me here in this part. That's my contact. All right. Okay, one of the question is that, are you accepting new members? Yes, if you need to, you can just contact us. All right. That's not an issue. Any other questions before I end the session? Or I'll pass back to Ethan on anything about what I've covered. So you are not using shorter time frame at all. Well, my time frame is mainly on the day and the 4 hour. When you say short time frame, right, I'm not sure whether you mean like 1 hour, because you have to know, right, that trading, as long as you're profitable, that's good. But it doesn't mean that when you're on the lower time frame, right, you are profitable. Or lower time frame can be fast, but it can be a lot of noises as well, and it doesn't fit my profile. Okay, what I wanted to do is that I wanted to have a life, okay, a life where I can spend time with my children, or I can do the things that I wanted, right? So by looking at such a low time frame, there's a lot of noises. You don't get good quality. I mean, I can just put in the trade pump and then it move like 100, 200 pips, and that's it. I'm happy already. I don't need to go and keep staring at it. Okay. All right, any other questions? Okay, no questions. I'll just pass the session back to Ethan. Thanks a lot for joining my session. Ethan, please.
Thanks, Binny. Yep. So thanks everyone again for joining us here today for until the end of today's session. And I think I saw some of the questions also asking about the recording for last week Thursday. So just an update that we have already uploaded last week's session, which is from Binni also, onto our YouTube channel. So the YouTube channel is IG Space Singapore. So if you are keen to watch the recording, just search for IG Singapore in YouTube and the channel should be the first one that's appearing. So just going to the channel is the latest video that we just uploaded. Okay, so before I end the session for tonight, right, I just wanted to ask for a very quick favor. So to actually just scan this QR code that we have right here on the screen and to provide your feedback for today's session. Of course, just feel free to let me know what kind of content you guys like to consume as well. So it can be on trading strategies, it can be trading psychology or anything related to trading. And then you can also let me know what kind of asset classes you guys are mostly trading in. Can be, stocks. Tesla is one of our most popular stocks. Can be the S&P index, the NASDAQ index, or Forex and commodities and things like that. So we know that for our upcoming sessions, we can focus more on all of these topics that you guys are more interested in. And yep, so just let me know about your feedback and your opinion by scanning this QR code. It won't take more than 1 minute. Okay. So if not, then we have come to the end of today's session. Of course, if you have any questions, just please feel free to drop an email to me, or if you need to reach out to Binni, just drop an email to her contact earlier. If you guys need her contact, just feel free to email me as well. So anyway, my email is ethan, ethan.lid@ig.com. Okay, so if you just need anything, just feel free to let me know. If not, then I want to thank everyone once again for joining us throughout this 1.5 hours. And have a great end to your evening. All right. Thank you.